All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Black Monday. Dare I say it? Do we have another Black Monday on our hands? I don't know, but it's looking like it. Today is January 27th, 2025. Quite possibly a day that will live in infamy. Possibly, maybe. Cautiously optimistic. I don't know, hesitantly pessimistic, however you want to say. But DeepSeek is wreaking havoc in tech stocks this morning. Absolute bloodbath in the NASDAQ. Typically the conversation is, oh, Jack, if the Dow is down 1,000 points, will we do a spontaneous live stream? Never really wondered if the NASDAQ was going to be down 1,000 points in a day. Might happen. So we may possibly be back later on today. We'll see. It depends if there's more developments or things. But let's talk about what's going on right now with DeepSeek. DeepSeek came out of nowhere. It is this new Chinese large language model, this new AI company. And the story broke kind of like midday Friday. We started to hear about it. By Saturday, Sunday, everybody was talking about it on FinTwit. By last night, when the NASDAQ future started trading, it was outright panic. So what is DeepSeek? DeepSeek is this new large language model coming out of China, and it is as good or almost as good as GPT-01, the latest AI model from OpenAI and Microsoft by extension. All right, that's the emphasis here. It is almost as good or right there by all these metrics, which I admittedly don't really understand AI performance metrics, but DeepSeek is right up there with GPT-01 in every category. It is as good or better as anything else that's out there. It is also open source. That's kind of how OpenAI was supposed to be. Remember the whole open in OpenAI? And funny how that works. And then Sam Altman realized, I could become a billionaire with this or make billions of dollars. Suddenly is not so open anymore. Hence the lawsuit between Elon Musk and Sam Altman and the rather hilarious pissing contest that has ensued between the two of them. But I digress. Open source, that's a big one. It's also the #1 app in the App Store now, passing ChatGPT. It is the #1 download over the weekend. So people are going bonkers for this thing. Now, here's the rub. Here's what's really special about this. And again, we're going to assume this is true for the moment, all right? For the next few seconds, humor me here because there's a lot of skeptics out there. The training cost for OpenAI's large language model was $5 to $6 million, or somewhere like 3.5–4% of the cost of trading GPT-01. It is ridiculously cheap, ridiculously efficient. They were able to create this model ostensibly, so the story goes, using just 2,048 of these H800 GPUs from NVIDIA. Now, H800, that's something you don't hear about very often. The H800, that's like the neutered version of the H100. Remember, there was like, all the export controls. We can't sell our best H100 chips into China because export controls in World War III in Taiwan. So they created the H800, which is kind of like got a governor on that thing, so it can't go as fast. DeepSeek took those, supposedly just 2,000 of those, and was able to make it work. Whereas all these other chatbots that are out there, the Meta version, the Google version, the Amazon version, Microsoft, OpenAI, all of them, they all use tens of thousands of H100s, much more expensive, much more powerful. In other words, the requirements for computing power for the best large language models in the world are about 5% of what they were just a few days ago. Now, some of you guys may be looking at some of those numbers and you're like, I don't know what any of this means. I don't know, H100, the GPUs. Understand this whole big bubble that's been going on in tech stocks, led by NVIDIA and by extension the Mag 7. This massive bubble has been an AI hardware bubble. All right. It's all about the hardware. There's no profits anywhere in artificial intelligence. No artificial intelligence product yet is making a profit. All of the money that's been driving this huge tech boom has been big tech companies scrambling to outbid each other to get their hands on as much of this ridiculously expensive, sophisticated computing hardware. as much as they can, tens of billions of dollars. It's become a contest to see which tech bro can spout off the biggest random number, ultimately culminating in Project Stargate and their $500 billion price tag last week. That was really nothing new, and yet it was enough to convince people to bid up the price of stocks that they already bought on the same freaking story. And then along comes DeepSeek and says, we don't need any of that. Tens of billions in CapEx, Meta's 60 billion, Microsoft's 80 billion. Oh my God, look at all these big numbers. No, we did it for $5 million. You better believe NVIDIA went, oh shit, when they saw that. Now, let me get my skeptical side. Let me humor the skeptical side of me here, guys. When I first heard this story, like any of these major breakthroughs, whenever these tech bros get up there and they claim they can do something that defies belief, my first inclination is typically they're lying. Right? That's the simplest explanation. And for a while, I was sitting there, I was like, DeepSeek, maybe just another Theranos, just fake it till you make it kind of thing. Look, we know these H100 GPUs, the really sophisticated ones, have been making it into China by the tens of thousands. We know because we can see all of a sudden China's sales and NVIDIA's earnings went to next to nothing, and yet Singapore's magically sprung up to what China's sales used to be. In other words, NVIDIA's just selling the things to Singapore, and then they're shipping them to China. So NVIDIA has been knowingly violating U.S. export controls, something we saw a lot of in that Hindenburg report and Orcafin's research into Supermicro. We know they've been violating U.S. sanctions. You can look on eBay and you can see H100's GPUs for sale, shipping from China, more than 10 available on multiple listings. There are warehouses full of these things sitting doing nothing in China. And we even had the CEO of Scale AI was on CNBC on Friday saying he thinks DeepSeek is lying, that they actually have 50,000 H100 GPUs and that they can't talk about it because it's illegal for them to have them. And that's the explanation. All right. So let me just say that is plausible, that explanation. It is possible that DeepSeek is just making it up and that they're lying. And I was leaning that way for most of the weekend. Now, in just the last couple of hours, a couple of people have sent me DMs of a couple of threads from some people who have actually looked at this code. Again, DeepSeek is open source. So a lot of this stuff can be verified by people who are admittedly a lot smarter than me. But I saw two threads this morning from Morgan Brown and another one from Word Grammar, who are kind of going into the software side of what DeepSeek did and how they were so efficient, supposedly, with their GPUs. And based on their assessment, which admittedly a lot of it goes over my head, it looks like DeepSeek may be telling the truth here. It looks like they really did figure out how to train these AI models for a fraction of the cost. And I do mean a fraction, guys, single-digit % of the cost. So let's not rule out that they're just full of it, but right now it looks like they're not full of it. And you've got Silicon Valley is taking this very seriously, and tech stocks are selling off as if they're not full of it. Now, look, they're selling this thing. The cost of using DeepSeek, 14 cents per million input tokens. I don't know what these metrics mean, but I do know the comparable metric for GPT-01 is $15 per million input tokens. So they're selling this thing for 1% of the cost of what OpenAI is. Guys, this is going to destroy the math for the AI bubble. Absolutely destroy it. First of all, NVIDIA, right? How are they going to keep up their 90% margins for these GPUs? How are they going to keep selling $100 billion a year in data center GPUs? How are they going to keep doing that if people don't need them anymore? If you can take a handful of second, third generations ago GPUs and make the best model in the world work, then why do you need a data center with 100,000 of Blackwells in them? Oh, by the way, NVIDIA still hasn't answered for the overheating problem with their Blackwell GPUs. That I'm sure within a couple of years, we're going to see an SEC charge brought against NVIDIA for making materially misleading statements about the overheating issues on Blackwell. That's a whole other issue entirely. But NVIDIA is in a big they're in trouble here, big trouble. I think we're about to see a lot of planned data centers get canceled because there is now going to be no demand for them, which also means that big tech, the Mag 7, they're going to need a new, shiny new thing. I don't know if it's going to be quantum computing or something else or whatever. Maybe we'll bring back the metaverse. I don't know. But AI data centers is no longer going to be a shiny new thing that is going to cause people to endlessly bid up their stocks. CoreWeave, My favorite of the hyperscalers, I hate that word, but CoreWeave. Oh, gee, remember, guys, they bought all those NVIDIA GPUs, those billions of dollars in GPUs with debt. And what was the debt on those loans that they took out? It was those GPUs, which the demand for them is now moving forward, probably going to be somewhere around 5% of what it was. So how is CoreWeave going to service the debt on the $10 billion they borrowed to buy those GPUs? It's almost as if it was a bad idea to allow a company to use a rapidly depreciating asset as collateral for $10 billion in loans. Who could have seen that one coming? Besides nobody. By the way, that CoreWeave IPO, if this story has legs, if DeepSeek is not lying about this and not just making this up, that CoreWeave IPO ain't going to happen. And if it does happen, it sure as shit ain't going to be at $35 billion or $37 billion like they're planning. CoreWeave, they probably didn't get a lot of sleep over the weekend over there. Also, these nuclear stocks that have been flying like crazy. What's going to happen to them? What's going to happen to Oklo? Well, take a look at what's going on with Oklo this morning. I think we can see. Do you really think they're going to be building these they were never going to build these reactors, to be honest with you guys. These stories that Oklo has been spinning about, we're going to have a nuclear reactor built by 2027 when the NRC hasn't even certified their design yet. That has always been just a story designed to sell stock to suckers. And there was never a chance of that happening, but now there's very little chance of anybody believing this story that there's never been any chance of it happening. Oklo stock is selling off. Companies like Constellation, my former employer, look, Constellation is a public utility. Public utility stocks are supposed to trade at what? 10 times earnings, 12 times earnings, maybe 16. Constellation has been trading at like 38 times earnings because, well, apparently public utilities are tech stocks now. That one's taken a bath this morning. Also, this AI hardware bubble is over, guys. If DeepSeek is not full of it, it's still an if, but I'm inclined to believe DeepSeek is telling the truth at this point based on some of the stuff I read this morning. It means this hardware bubble is over. All right, now does that mean it's popping? We'll see at the open. Silver lining, AI may actually be profitable now. Now, remember, guys, at the end of this, we've been talking all about the hardware and the GPUs. You also have all of these AI companies, AI, the actual product. Well, now that the cost of AI is being driven down by something like 95%, maybe some of these AI companies might actually have a chance of turning a profit now. So there's a silver lining there. Guys, this is going to be a big story over the next few weeks. I don't know if the bell is going to ring and people are going to be like, oh, it turns out they're lying and the stocks are going to be bid right up. But if they're telling the truth, this is absolutely the black swan. This will be the pin that pops the bubble with the asterisk if they are telling the truth. Right now, I'm inclined to believe they are. We also had a rather hilarious story over the weekend. There was 2 flights, military flights, full of migrants that were being deported from the United States. President Trump is following through on his promise of mass deportations. The first flights were bound for Colombia, and the Colombian government refused to accept them. They turned the flights away. And, well, Mr. Orange was not too happy about that. And Mr. Orange threw a fit, as Mr. Orange is known to do. And what did he do? He instantly threw 25% tariffs on all exports to the United States from Colombia. And he instantly said that's going to go up to 50% in a week if you don't change your mind. And he also threatened all kinds of economic sanctions and canceled visas for Colombian leaders and diplomats. And, well, Colombia changed their mind. Go figure. I guess they thought they were going to be cute. I mean, you got the president of the United States who's tweeting out pictures that say FAFO on them, AI-generated pictures, by the way. Yeah, that story happened over the weekend. We had the price of coffee was spiking. The price of cut flowers almost spiked dramatically right before Valentine's Day because apparently cut flowers is one of the largest exports from Colombia to the United States. I guess I learned something today. So that story's behind us, guys. But the big one, really, it is this AI bubble and DeepSeek this morning. So why don't we shrink my big melon of a head and let's see what's going on in this market, shall we? And by the way, guys, hit that like button and that subscribe button if you're new here, because we do this every single day, bubble or no bubble, black swan or no swan. We still do this every day. The S&P 500 right now is down 136 points, 2.25% lower, off the lows, well off the lows from pre-market here this morning. It was bouncing a little bit. Now it looks like it's starting to roll back down again. The Dow, meanwhile, holding up pretty well considering what's going on in tech. The Dow is down 382 points or 0.86%. Still down, though. This is the best of the three indexes this morning. And then looking at the NASDAQ, yikes, 793 points lower. We are 3.6% down ahead of the open. At one point this morning, we were 4.5% lower. The NASDAQ is just taking it on the chin here. Obviously, the NASDAQ has led this bubble. Big tech has led this bubble, and big tech will lead the bursting of this bubble. Meanwhile, the U.S. dollar is weaker this morning, down 34 basis points at 107.1. It's interesting to see a weakening in the dollar this morning. But when you look over at this chart, the USD JPY chart, this is kind of interesting. All right. The number of yen to make $1. It's on its way down. We've got the yen strengthening right now. And that's actually a pretty big red candle here on this yen chart. Now, keep in mind, guys, on Friday, the Bank of Japan raised interest rates by 25 basis points. That is as big as the two prior rate hikes combined that led to this big market panic in August. And, well, we've got a big drop in the yen going on right now. Now, I don't know if the yen carry trade is unwinding, contributing to the sell-off in the NASDAQ. I think it's probably more likely right now that this sell-off in the NASDAQ is resulting in a lot of people unwinding their yen carry trades. Like, oh, my God, if NVIDIA is crashing or ARM Holdings is crashing, I better sell the stock. And, well, since I sold the stock, I might as well pay back the yen loan that I took out to buy it. And so you're seeing the yen strengthen against the dollar this morning. This is kind of like a chicken or the egg thing. I'm inclined to believe that it's DeepSeek resulting in the unwind of the carry trade a little bit and not the unwind of the carry trade resulting in the sell-off in tech stocks. But keep in mind, guys, that August crash in markets that happened because of Japan, we could see a repeat of that here. We could be at the beginnings of that. Also looking at the Treasury market this morning, the bond market, we've got yields sharply lower in the long end of the curve here. A little bit of a flight to safety in bonds going on. The 30-year Treasury, 4.777. That's down about 7 basis points. A lot of sevens there. Good luck. The 10-year Treasury, 4.527. That's down almost 10 basis points. The 2-year, 4.186, down 8.5 points. And the 1 month is essentially unchanged at 4.331. Looking over at the commodities board, we've got gold and silver are not liking these cheaper yields this morning, or these lower yields, I should say, not cheaper. We've got spot gold is down $17.68 here, trading at $2,753, off the all-time highs, about 0.64% lower. Spot silver, meanwhile, $30.22. That's down by about 38 cents or 1.25% lower. Again, lower yields or the flight to safety. I'm a little surprised here, to be honest with you guys. I'm not really sure what's going on with gold. You'd think gold would be doing well during a market panic. It seems like people are just selling everything this morning. Looking over at copper, we've got it 1.17% lower. Platinum is down by about 0.8%. Palladium is down by 2.3%. WTI crude's down 0.5%, $74.28 for March oil futures. Also on the futures market here, speaking of commodities, shout out to my buddies over at MacroEdge. They tweeted this one out over the weekend. Look at egg prices here, guys. That bird flu thing and the cost of eggs, yikes, over $6 a dozen for the average here, $6.65, an all-time high. We're now blowing away that all-time high that we saw in 2022, 2023, the last time this bird flu thing happened. So the price of eggs getting even worse here. Looking over at Bitcoin, we see Bitcoin is struggling to maintain 100,000 this morning. Keep in mind, guys, Bitcoin tends to trade like a tech stock, and all tech stocks are having a pretty rough morning here. Bitcoin went as low overnight as $97,700. Right now, we're still above the 100,000 mark, about 100,743 as priced on Coinbase. But this tech sell-off, not a good sign for Bitcoin here. Now, let's talk a little bit more about this article in Market Watch. This one about DeepSeek. This one had some pretty good talking points in it. DeepSeek story is bad news for NVIDIA and the microchip makers. It may be worse for these stocks. And they're actually talking about the nuclear plays here. Nuclear plays have surged over the last month and last year as AI hopes that may not come to fruition. Gee, who could have seen that one coming besides nobody? It feels like this day was always going to come when the artificial intelligence names collapse. And right away, I have to just say, this is Market Watch. Market Watch was the first website to post that Randos article that told you never listen to the doubters of the AI bubble. And now here they are saying it feels like this day was always going to come. Gee, go figure. The people who told you I was full of it all along are now claiming that they called it all along. Who could have predicted that? But I digress. But one might have imagined it would come from, say, a profit warning from NVIDIA. That's what I thought the form it would take. Instead, it comes from what appears to be an NVIDIA consumer Chinese AI service provider, DeepSeek. It works well, jumping to number one in Apple's US App Store, but the issue is less the performance and more the training behind it. There are differing claims as to the number of NVIDIA chips used by the company, 10,000 or 50,000, the latter roughly the size of the cluster on which OpenAI is training GPT-5. But what is rocking markets is how cheap it was. DeepSeek's own research paper puts the training cost of one of its models at less than $6 million. OpenAI's GPT-4 used an estimated $78 million worth of compute to train, while Google's Gemini Ultra cost $191 million, according to Stanford. Not everyone is convinced, though. Let's see. We've got Atif Malik as a Citi analyst, was among a number of skeptics questioning DeepSeek's thriftiness. What is real is that DeepSeek is charging end users significantly less, 14 cents per million input tokens versus $15 for OpenAI's O1 model, less than 1% of the cost. And guys, how is Microsoft ever going to recover their cost of the investment in OpenAI if a competitor is selling a product every bit as good for 1% of what OpenAI is charging? And by the way, OpenAI is currently not profitable. And if they have to lower their prices by 99% to compete, well, I doubt that's going to help their profitability very much. As much as the tech stocks are getting crushed, at least there's a use for them in the DeepSeek-fueled future. What about the companies literally powering the AI revolution? The utilities and their suppliers. Morgan Stanley last year forecast that AI power consumption could increase from 3% of electricity consumption in the U.S. in 2023 to 10% by the end of the decade. Will that be the case? The DeepSeek model is open source, so if their claims withstand scrutiny, and so far they have, the other AI models will copy their techniques and become vastly more efficient. And, well, what does that mean for the companies building out data centers and the companies trying to sell them power? Well, and in the power space, the group of stocks that have been most tied to the AI revolution are the nuclear plays. Shares of Oklo, a designer of fast reactor, have gained 97% this year, just in January, and 289% over the last 52 weeks. Shares of Constellation, which thanks to the Microsoft deal for restarting 3 Mile Island, is up 186% over the last 52 weeks. Guys, utility stocks are not supposed to go up 186% in a year. Do you think maybe some people should have been asking questions along the way, like, hey, maybe something's up here when a utility almost triples in 1 year? The utility stocks are supposed to be boring like bonds. They're not tech plays. But hey, don't ask questions when the number goes up, right? The market clearly doesn't like that. Now, this is a post from Walter Bloomberg this morning. This was pretty good. A lot of these analyst reactions here. We've got Sandeep Deshpande from JP Morgan suggests that the AI investment cycle might be overhyped. Gee, you think? DeepSeek's efficiency could lead to a more efficient future, which means a lot less demand for GPUs. We've got Edison Lee over at Jefferies proposes 2 strategies post DeepSeek: continue investing in computing power or focus on efficiency, potentially reducing 2026 AI capex. Pay attention to that, reducing 2026 AI capex. Microsoft has already blinked on building out data centers. Now they're focused on building out power. So I think we're going to see this 2026 AI capex start coming in big time from the Mag 7. My favorite analyst, we've got Bernstein's Stacy Raskin, believes the panic is overblown and maintains outperform ratings on NVIDIA and Broadcom. All right, well, don't listen to randos, right, Stacy? Go ahead. Somebody out there is selling a product at 1% of the cost, and well, you believe the panic is overblown. I'm sure if I'm sure CoreWeave is going to do great with their IPO now that 95% of their product is not needed. So okay, I got a chuckle out of that one. We just talked about Atif Malik from Citi in the last one. We've got Raymond James is suggesting that if DeepSeek's innovations are adopted, training costs could decrease, questioning the need for large GPU clusters. And we've got Cantor's CJ Muse sees DeepSeek's development as bullish for compute demand, suggesting industry increased rather than decreased need for GPUs. advocating buy NVIDIA on any dips. Guys, this last one really takes the cake here. He sees these developments as bullish for compute demand. There's been a breakthrough that allows somebody to do the same thing with 1% of the computing power. And this guy is saying that's bullish for computing demand. Wow. Talk about one-dimensional. Okay. Good luck with that one, CJ Muse over at Cantor. And by the way, shout out to Zero Hedge who sent this one this morning. You've heard of DeepSeek's R1, but have you heard of ByteDance's Dubao or Moonshot's Kimi K1.5? The race to the price bottom is just starting, and nobody does it like China. Apparently, Dubao is making similar claims to DeepSeek here, saying their new model is 85% cheaper than the industry average price. So DeepSeek may not be a one and done. There may be several other competitors coming out of China. Again, if these guys are telling the truth, yikes. Absolutely yikes. Look at NVIDIA stock price right now, down 12.4% ahead of the opening bell. It's trading at $124. That's something like $350 billion of market cap. And NVIDIA alone has gone up in smoke this morning, guys, and the bell hasn't even rung yet. Let's look at some other names, what's going on in markets here. SMCI, Super Microcomputer, the biggest fraud in AI. They're down a more respectable 8.9%. Still, we've got people paying $30 a share for a company that has basically been proven to be doing widespread accounting fraud, violating sanctions, and now their product is pretty much unnecessary, and it's still trading at $30 a share. I don't think that one's going to last. Let's look at some of the big hyperscalers here. Microsoft, chief among them. They're down 4.45%. Microsoft's holding up pretty well here. Amazon, meanwhile, they're another big hyperscaler, down just 3.7%. So with the exception of NVIDIA, the Mag 7 seems to be holding up pretty well. Apple probably not selling off very much this morning. Apple's actually up this morning. That's interesting. They're 1% higher. Apple Intelligence has already... Well, the headlines of Apple Intelligence haven't been that good over the last year. Apple has had a pretty rough start of the year. They're already down 10.6%. So you could argue some of this news maybe was already priced into Apple. We've got Meta not looking so good either here, down a few percent, 3.25% lower for Meta. Let's just finish off the Mag 7. Let's throw Google up there. Google is down by 3.5% this morning, and Tesla probably also down. Tesla down about 3%. So pretty much down across the board, the Mag 7. Now let's look at some of those power names. Like look at Oklo, the biggest fraud in nuclear power, if you ask me. Oklo down 22% this morning, trading at $32.47. But I would just add year to date, they're still up 36%. So Oklo's got a lot longer to fall. Again, these Oklo reactors, they're never going to get made, guys. They just no chance. I don't want to say never. There's no chance they get made by 2027, which is what Oklo is claiming. There's no chance that happens. Also, let's take a look at Constellation Energy. That's one of the biggest nuclear operators in the country. They're down 16.2%. All right. Again, utility stocks are not supposed to trade like this, guys. This thing was trading at like 38 times earnings. It's a public utility. You buy them for the dividend, for their boring 2-3% dividends. So when you saw utility stocks rocketing like that, that should have been a clue. It's getting pretty volatile now. The opening bell has rung. All right, let's talk real quick about this Colombia story. Trump says he's slapping tariffs on Colombia after it turns around U.S. migrant flights. This was the big story on Saturday. All right, the Colombia's president said, nope, you can't land. You're not going to send these people back to our country. Go back to America. And, well, the Donald was not happy with that. President Donald Trump said Sunday he is slapping an emergency 25% tariff on all goods imported from Colombia after the country's president turned away 2 U.S. military aircraft full of detained Colombian migrants. The action could be the first legal test of Trump's threat to impose sweeping tariffs on trading partners, which he likely has power to do under emergency authorities. The punitive duties against a country where the U.S. has a trade surplus, which Trump announced in a social media post, would increase to 50% in a week as the U.S. president ignites another fight with a foreign leader over his tariff and immigration policies. Colombia's largest exports to the U.S. are petroleum, coffee, and cut flowers. The country also often ships gold and aluminum structures to the United States. And, well, that story didn't last so long because the headline this morning, White House says Colombia agrees to take deported migrants after Trump tariff showdown. So it seems the threat of tariffs was enough to say, oh, you know what? On second thought, clearance to land has been granted. That didn't take very long. So Colombia seems to have blinked. Trump kind of made an example out of them, it looks like. Now, just some of the things we were looking at over the weekend. We saw a big spike in coffee futures. They went to another all-time high, $355.75. They have since come down on news that those tariffs are not going to be put in place after all. Now back down to 345. So, yeah, we had that one. That was that one kind of came and went very quickly over the weekend. And guys, we got the opening bell has rung. So I'm going to go ahead and I am going to leave up a 1-minute chart of the NASDAQ here. We'll scroll back a little bit so we can just kind of watch what the NASDAQ is doing at the open. It's currently at 19,954. Is the NASDAQ really only down 99 points right now? That can't be right. It's only 0.5% lower. Did we get a big bump in the NASDAQ at the open? This is showing it's only down 0.5% for the NASDAQ composite. That can't be right. Let's bring up the investing.com one. Something tells me that that indice, that reading on MarketWatch is not accurate here. Let's bring the NASDAQ up here. Yeah, this is a little more, down 3.1%. Let me bring this one up. Oh, message from Mish. What do we got here? Refresh. He says, yeah, it might be time to refresh. Let's see. Yeah, there's something's up with TradingView this morning. We'll go with the NASDAQ reading. We'll set this to 5-minute candles. Yeah, we are currently down 615 points. There we go. Like there's your open all the way down here, down about 3%. So while we go through the super chats, I'm going to leave that one up there so we can watch what the NASDAQ is doing in real time. Although it looks like it's off its lows of the morning. Just want to say thank you very much to Rahul Pinto. Thank you, Rahul, for the super chat and the support of the channel. He says, does the AI bubble pop have a contagion effect? You better believe it does, Rahul. Abso-freaking-lutely. All right, let's just go through a couple of the knock-on effects. First of all, since November 30th of 2022, when ChatGPT was initially released and the AI bubble officially began, we've had something like $18.5 trillion, trillion with a T, something like $18.5 trillion in market cap has been added to U.S. stocks. All right, assuming, let's just say hypothetically, a third of that were to go away, only a third of that, which that may be conservative. You're talking about something like what, like $6 trillion in value evaporating. You can't lose that much money without knock-on effects. All right, now let's just take a look at, say, CoreWeave, for example. CoreWeave, one of the big hyperscalers, they borrowed $10 billion to buy GPUs, and the collateral for that debt was GPUs. All right, so if apparently the demand for GPUs is going to drop by 95%, then what do you think the odds are that CoreWeave is going to be profitable, that CoreWeave is going to be able to service that debt? Next to nil, next to nothing. All right, now if CoreWeave can't service that debt, CoreWeave goes belly up. And then what do the debtors do? Well, maybe they come in and they repossess the collateral. A bunch of GPUs that there's no demand for. Oh, by the way, those GPUs, they're now 2-3 years old. They're halfway through their useful life. All that debt goes up in smoke. So the people who lent that money to them, companies like Magnetar Capital, they're going to have to write off all that money. All right, so there's no way there's not going to be contagion effects. So much debt and private credit has been loaned to these companies. So absolute contagion effects, abso-freaking-lutely. Not to mention all the margin debt that's out there, all the people who are buying stocks right now with borrowed money to play these zero DTE games that they've been playing. You better believe there's going to be contagion effects, abso-freaking-lutely. Also, the write-downs, this hundreds of billions in capex from the Mag 7 to build out all these data centers. What are their earnings going to look like for the next few years if they have to write down the value of those investments to near zero? Or to 5 to 10% of what they paid for them? What's that going to do to Microsoft earnings, to Google earnings, Meta's earnings? Not going to look good. Thank you, Rahul. Appreciate the super chat, the support of the channel. Raphael, oh man, I'm not even going to try to pronounce that, Raphael. How about I just call you Raf? Raf, thank you for supporting the channel, sir. He says, are they going to halt the markets? A lot of people are going to get wrecked. I don't know if they're going to halt. What's the threshold for the NASDAQ? I don't know what the circuit breakers are. Right now, it looks like no. I mean, I don't think this sell-off is enough. I could be wrong about that. I mean, Miss, shoot me a text if I'm wrong about that. I don't know what the circuit breaker is for the NASDAQ. But right now, it looks like a no. Markets are actually moving. They opened way down. They gapped way down at the open, but they're actually clawing this back. Let me set this NASDAQ chart to 1 minute candle so we can see it a little more accurately here. But right now, looks like losses are holding around 600. It's hard to predict the mentality of a mob in a panic. So, I mean, I'm not going to try to forecast what the market's going to do for the next few hours here. Thank you very much, Raphael. Appreciate the super chat. And yes, a lot of people are going to get wrecked. JJ Watt, what's going on, brother? He says, is it just me or are analysts now comparing our current situation more to 1929 versus the crashes in 87, 2000, 08, and 20? I've seen some 1929 comparisons. I saw a lot of the 1929 comparisons in 2023 during the regional banking crisis with Silicon Valley. I'm still leaning a little bit more towards 2000 personally. This still resembles more the tech bubble than it does anything else. But the thing is, we're not just talking about tech stocks. We've also got this commercial real estate bubble going on. That's in parallel with the tech bubble. We've also got this private equity bubble, which is a little bit of both, right? The private credit, private equity, the avoidance of price discovery. And that overlaps, if we're doing one of like Kamala's little Venn diagrams, that would overlap with both commercial real estate and AI. So you've got all these things. Let's throw a crypto bubble on top of that while we're at it. And the everything bubble is alive and well. So if you were to add up all of the components of the everything bubble, I think we're getting to a scale of 1929 now. It's certainly bigger than anything of those other, those other smaller crises that you mentioned. Now, will one cause the failure of the other? That's like your worst case scenario. I think before that happens, though, I think they spin up the money printers and they just start buying all these troubled assets up. I mean, I don't know. Maybe the Federal Reserve is going to print money and buy CoreWeave. Hey, it's the 2020s. Let's not rule it out. I feel like I just gave them the idea. I hope they don't really. Oh, my God. The Federal Reserve is going to be in the data center business now. What's the worst thing that could happen? It's going to be great. You're going to love it. Thank you, JJ Watt. Appreciate the super chat, support of the channel. And Spade Espada, thank you, sir, very much for supporting the channel. He says Dow peaked 1036, 1272, 12674, closed at 587. Didn't close. What are we trying to say? I'm sorry. There's a lot of numbers here. There's a lot of shortening here. 9 years later. Okay, we're talking about like basically a lost decade of the Dow Jones. Do you see anything similar on the horizon? So if the United States were to enter like a lost decade, a la Japan, a la China's heading into right now, or like we're talking about in the 1970s, it would require inaction by the Fed. That in order for that to happen to the Dow, we would need the Fed to sit back and let it happen. And the Fed doesn't sit back and let things happen these days. We still have a Fed that just loves to pound the keyboard, right? Like, like that buddy of yours when you were playing Street Fighter 2 Turbo when you were a kid, and all he's just doing is like beating the crap out of the controller, trying to do something. That's the Fed watching a crisis in stocks. So I don't think the Fed is going to sit back and do nothing. I think they're more likely to just start the mass monetization of debt, create special purpose vehicles to buy up private credit, bail out everyone and their brother. I think that's more likely to happen. And in order to get one of these periods where it takes 10 years for stocks to reclaim their lows or the previous highs, you'd need the Fed to allow that deflationary bust. And I just don't see that happening. And I don't think the Donald wants that to happen either, because, the guy who's currently in charge, he likes his stock bubble. So he's going to put a lot of pressure on the Fed to try to cut, to lower rates, to monetize that debt. So I don't think that's going to happen. It could if the Fed does nothing, but that's a very big if there. Thank you very much for supporting the channel, sir. Arbitrage says DeepSeek will raise price. No need to leave money on the table. Well, let's say DeepSeek were to increase their prices tenfold, RB. All right. And they could do it, right? Let's say they 10x their price. They're still going to be 1/10 the price of OpenAI. You gotta look at the numbers here. You got to pay attention. You got to do the math. I realize math and AI bubble, these two have been seeing other people for a long time now, but sooner or later, the AI bubble and math are going to have to turn around and face each other and acknowledge the huge gap between the two of them. And yeah, DeepSeek probably will raise their price. They've got a lot of room to raise their price. They could raise it 99-fold and still be cheaper than OpenAI. So I think you're being a little overly optimistic there. Maybe I'm being overly pessimistic. I don't really do optimism. You guys may have noticed that. So, take that with a grain of salt. But the numbers here, the scale of the breakthrough at DeepSeek, if it's real, can't be ignored here. And these guys who are out there saying like, oh, buy any dips in NVIDIA and this is going to drive compute demand even higher. Those guys have been singing the same song so long. Listen to them at your peril. That's all I can tell you. I cannot imagine anybody who reads this story and thinks compute demand is going to increase. I just can't imagine what goes through their mind. Thank you, RB Trash, for supporting the channel, sir. Charles G says, is this the next GFC? It's too early to tell that, Charles. It's way too early. We're still, this story is a few, if you discount the weekend, if you go by market trading hours, this story is only a few hours early. So, I'm sure there's going to be some people in the comments are like, you're going way out of proportion with this, calm down, lighten up, Francis, all that kind of stuff. I love a good movie quote. Maybe that happens. Maybe the dip buyers come in and take this up. But again, the numbers here, the claims here, $5 million training cost versus $100 million training costs, the price being about 1% of what OpenAI charges. I mean, you're talking about valuations that weren't stretched, guys. These valuations were like permanently plastically deformed, ridiculously high valuations that these companies, these hardware companies for AI were trading at. And now it looks like the demand for that product may be evaporating. And we haven't even gotten into the accounting BS, right? The channel stuffing and the round tripping schemes, right? Those cannot survive even a slight decrease in orders. All right. And the tide is coming out now. We're about to find out who's been swimming naked. There's going to be a lot of super micros in the weeks ahead. Call me crazy, but I think we're going to hear a lot about companies like that. So is this the next GFC? Too early to tell, but it could be. That's best I can do there, Charles. Thank you for supporting the channel, sir. And Hunt and Cover says, is today Monday or Friday? It is definitely a Black Monday so far. NASDAQ still down 3%. Guys, the NASDAQ's holding up pretty well here. All the selling was pre-market. At least for now, it's not full-blown panic. We're not seeing uncontrolled selling. The algorithms dumped before the open. Retail is either buying the dip, offsetting the algorithms right now, or everybody's just got their hands off the panel and watching. But we're not seeing an ongoing bloodbath. All the selling was pre-market. Right now, things are pretty stable. So we'll see. Does that hold up, or who knows? Maybe we will be back live in the next couple hours. But either way, guys, there is a reckoning coming for the AI bubble. And, it's going to be glorious to watch. Thank you guys so much for all the super chats, for supporting the channel. I appreciate that very much. Also, shout out to my magnanimous melonheads on Patreon and YouTube. You guys are awesome. Thank you so much for everything you do for the channel. I got links down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, everybody, live small and dream big. Oh, and don't forget that like button and that subscribe button on the way out.